High yield versus dividend growth. What's the difference? So are you wanting to build a portfolio that is just super high yield today, or do you want to build a portfolio that grows for tomorrow?
Can I answer both?
Yes. So let's talk about high yield dividend investing.
Yeah.
What is it?
So high yield, you're really just looking what's going to pay me the most based on my dollars that I'm going to invest. So this is something that's probably going to be in, above 5-6%.
Yeah, let's qualify.
Yeah.
Like, what is a high yield?
I would say anything that's kind of getting into that 6, even 10. There's a couple that'll pay in double digits.
Mm-hmm. Gotta be careful with that.
You do have to be careful, which we've got a great podcast about.
Yes,
that.
we do.
The trap there. But yes, a high yield, something that's probably paying in the 6 and above would be where I would put it.
So high yield, to reiterate, that's like, hey, I haven't been on the dividend train my whole career, my whole investing life, and I'm getting ready to retire and I need money. I'm going to go try to find a higher yield because I didn't have the time. On the other podcast, talked about dividend growth, where you might have invested, $100 and it's paying you tons, where now it's like, I need a sufficient income to pay my bills. So high yield is going to be a higher percentage rate on the dollar that you invest. That's not necessarily better or worse.
Sure.
It's just a different mentality.
Yeah. I give them $100 and they give me $6.
$6 instead of $3.
Correct.
Now, why would you want to invest in a dividend stock that's paying 3% as opposed to one that's paying 6%?
Well, sometimes the reason why you would choose that is because it has a great history of not just paying that 3%, but they increase it.
Mm-hmm.
Secondly, the reason that their yield might be so low is because there's been so much growth in the stock. The dollar amount might actually be pretty good,
Mm-hmm.
but because of where their stock price is, that $100 doesn't go as far as it would for another company.
The fun thing as a portfolio manager, like, where are those opportunities? Can we go buy a dividend growth stock that happens to also be a high yield?
That's right.
So where there could have been company that merged with something else, deflected some balance sheet changes, took it on the chin in a given year, made things look really bad for whatever reason for taxes, and now their stock just got crushed. And that yield that used to be 3.5 is now 7. Because their stock lost 50%,
Mm-hmm.
they increased their dividend. They're in a great position. They just offloaded a bunch of stuff, and their stock got crushed in the situation. And now you've got a high yield stock that's also a dividend growth stock. That's the best of both worlds.
Best of both worlds. That's your A player. That's your all-star.
We're not in this for the purpose of this discussion.
Yeah.
A high yield stock is not that. No. A high yield stock is. It might be one that's increasing. It might not. It's just got a good yield and, a good high yield greater than 6-7%. But it's not because their stock went down. It's because their history is they're paying a lot. They might have 3-4 years of dividend increases, or they might have been paying the same for the last 5 years. It's not the A player here.
No, we love sports analogies. This is your veteran role player. You know what you're going to get. More than likely, he's probably not going to pop off and drop, 40 points, since we're in some basketball right now, but going to be very consistent. You know exactly what you're going to get.
But at the same time, he's a veteran, so we might have a shelf life.
That's right.
That you might not want to keep forever, where dividend growth players, you might have them in your portfolio for the whole time you own the team.
That's right.
Right? Where the high yields, there might just be a specific time where you're like, okay, I'm going to put him in here for the next 5 years, or you don't really have you don't know. We never really buy something going, hey, we're going to hold it for a year or two. We buy it because we believe it's quality, and then when the time comes, we'll make a decision. The high yield stocks, unless it's the A player, might have already out of the gate a shorter shelf life because we understand the purpose of why we're putting them in there.
That's right.
And we understand the fact that, this isn't the type of stock we love.
Mm-hmm.
We just need it.
Yes. It's filling this gap.
It's filling a gap
right now.
Yes.
And as new opportunities come, we'll trade up.
So what are the risks in a high yield position?
Well, sometimes when they're a high yield, that yield can be on the chopping block. And we've seen that happen over the past 4 or 5 years.
There's some dangers.
The yield gets a little bit sideways where it starts hitting a double digit. It might be at 14% and the board's like, hold on, That's a little bit more of a payout than we need, and they'll cut it in half. They'll cut it, which is still a great one, 7, but at the same time, it's not what it was. And so you've got to just be careful. That's some of that risk that you have.
And we would love to, hold a high yield stock, potentially get out of it before they make a change like that. Sometimes we're ahead of the curve, sometimes we're not. But when they cut that stock, that dividend, and that stock gets plummeted, that's where I'd love to swoop in and be like, hey,
yes,
that's a great buy, that's a great position. But high yield stocks have, I would say, more risk potentially because of the high yield that they're paying, the stress on the cash flow of the business. What do the fundamentals look like of the actual stock? I mean, you have to do your research, but a high yield stock, not the A player high yield, just a traditional high yield, I think you almost have to be playing defense. You can put them in your portfolio, but you got to be really careful with a high yield stock because so many dangers, the world's at them because it stresses a balance sheet. When you've got, a payout ratio of 80, 90% or 130, whatever pushed that yield up. And you're like, you can have some at 400%, which doesn't mean it's bad. It just means it's like, we better pay real close attention right now.
Well, and that's where as portfolio managers and as we're analyzing stocks and how you want to build your team, how you want to build your portfolio, they can be great role players, but that's where you're going to have to do a lot more homework and really do your research continually and make sure that you're paying attention to what the company's saying, what their financials are saying on a quarterly basis, because you want to be sure you don't get caught.
So let's focus in on dividend growth investing. How is, investing in a growth dividend yield different than just a high yield?
Yeah, I'll be honest. This is the part that gets me probably the most excited. Just knowing that now my whole mindset's moved fully into dividends and longer time frame. It's great to see that a company's paying a strong dividend. They've been paying it for a while. But how much are they increasing it every year and every 3 years and every 5 years? Is that consistent? Or was it just like a one-time, we did really well this year, so we increased it a lot? But if they show that consistency of not only are we going to pay a 3% yield, invest $100 and you get $3, but every year we're going to increase it by 8%, 10%. There's several companies that we have that just have this, they're increasing it 10% every year for the last 5 and 10 years. And I'm like, that gets me really excited because I think, where's it going to be in 20 years?
This really begs the question, how much further down the road can you get when you're chasing dividend growth versus going and buying high yield today? And this is the great debate, in my opinion, because it's if I can get a stock that's paying me twice as much dividend today than a stock that's paying half as much, but growing it at 5, 7, 10%, which one's better? That is a great question that is very difficult to answer. But I can tell you, if you go back to some of the other podcasts that we've had that talk about dividend growth and the Warren Buffett examples of dividend stocks that we've talked about in the past, I can tell you dividend growth without exception is always going to be better long term.
Sure.
Okay. But that doesn't mean there's not a place for high yield. But the dividend growth, just like you associated, it's exciting. It's like, playing fantasy football, where you're every week you're like, oh my gosh, my quarterback went off for 45 points, and then next week I remember the first year I ever played fantasy football, I was working for Nortel Networks way back in the day. And I'd never even heard of fantasy. And Marshall Falk was the stud. He was
number one pick for everybody.
Oh, everybody. And I had him on my team the year he became Marshall Falk. And he was a video game with the screen passes. He'd take a screen pass that you'd think he's going to get 3 yards. He'd take it 75 yards to the house. And that was the greatest show on turf. I mean, that was such a fun season that they made that movie about, All American. And the excitement of watching this player, do things every single, game, you're like, this is amazing. That's kind of a dividend growth where it's you get so excited to watch this stock. They're making changes. They're making market moves. They're doing all these things fundamentally to their business. And then you look at their balance sheet, which sounds like we're getting excited about balance sheets and stocks. But then you look at their yield and what they've done for the past 10 years, 15, 20, 40 years. And you're like, oh my gosh, this is Marshall Falk in a stock where
That's
you're
it.
like, how exciting is this? Yeah, it's only paying 3% today. But if I had purchased that 15 years ago, 25 years ago, my yield might be 25%
That's right.
on my original basis today.
Yep.
Which is the real excitement. It's not what's it paying me now. It's what's it paying me since I invested.
It's the profit on your investment.
Yes.
We used to, whenever I was in the beverage business, we used to always tell the restaurateur, like, do you take your cost to the bank or do you take your profit to the bank? And to me, that's dividend versus your share price.
Yep.
Because the share price, it can literally be 20% less tomorrow than it was today. But that dividend, especially if you've done your research and you pick a great company, the dividend's not going anywhere for the majority of the with high probability. It's not going anywhere. That's real dollars that one day you can turn on to live on. That's growing by 8-10% every year. Like, that's a bonus that you're getting, a pay raise from your job.
Well, and think about how it affects your mind, because so many people, before they come and meet us and they understand our strategy, they're a 4% rule. What's the safe withdrawal rate? What's the amount of money that I can take out of my portfolio without affecting or fearing that I'm going to lose the majority of my principal?
Well, there's commercials. What's your number?
Yeah.
It's like, what's your nest egg number so that you don't run out of money?
Yep.
Like, what?
That is a dangerous proposition.
Yes,
that's like going to Vegas and going, what can I lose and not run out of money? How much can I spend and gamble away without the fear of running out of everything?
No, thank you.
And I've heard a lot of stories and watched a lot of movies of people losing everything because they didn't play the game right.
That's right.
Well, with dividends, you don't have to worry about that.
No.
Because you're like, I'm getting paid to hold this investment. Okay. Now, how should you put a strategy together? You got high yield, and there's good places for that. And you have dividend growth, which should be the vast majority of your portfolio. Yeah. How do you mix and match? Like, what's appropriate?
That's why I said I want both, right? At
I want both too.
Yeah.
I want the A player, high yield dividend growth pair. That's what I want.
But if you don't know, I think a healthy mix, at the end of the day, I think what's going to determine, especially if you're trying to do this yourself, is you've got to identify how much income do you need, right? Because if you need a large amount of income and you only have minimal assets, you might have to focus a little bit more heavily on a higher dividend yield so that your investment dollars go further. They produce more income for you. But on the flip side of that, if maybe your income isn't as high based on how many assets you have, you may be able to focus more on the dividend growth companies, which potentially could have a little bit lower yield, and you don't have to be so heavily focused on the high yield.
I would say anybody who's listening to this, you're going to fall into the trap, vast majority, of I want more now.
Yeah.
Why would I go and put together a portfolio of 3% when I can get 6%? I get that. I understand that. But I would also say at the end of the day, in order to build a very robust, rock solid portfolio, the vast majority would have to be in those dividend growth positions. That doesn't mean they're not all 3%. We're always making it sound like the dividend growers are 3 and the high yields are 6. There's dividend growers that are 6.
Yeah.
So there might be high yields that are 12.
Right.
That discussion would be different because you can find a lot from 4 to 5.5% dividend growers, and you can find a lot high yields, 7 to 10%. There's so many different dangers in each of these categories, and it's going to be really important to build a robust portfolio that probably has a mix of both. I'm going to put percentages on it, but these are not hard and fast. I would personally say 75 to 85% should be dividend growers. And then you can have those outliers. And I can tell you we put them in our portfolio all the time. And it's typically the stocks that I get the biggest complaint about. And the funny thing is, when I talk to clients, they're like, when are we going to get rid of this position? Or why do we have this position? It's typically, lost its shirt or whatever, but we bought it. It was at 7.5% yield. It was a high yield, good investment that went bad.
Yeah.
And, that's the problem with focusing your attention on high yield, because you're so much more susceptible to making a mistake. And there's a danger there. So I don't want to set this conversation up, this part of it where we're like, what should you buy? Because everybody's going to go, I want the high yield.
Yep. Yeah. But we got a whole podcast that dissects that and why
the high yield trap.
You just got to be careful with it. So,
all right. So let's land the plane. Last little bit of advice.
It comes back. Do your research. Make sure that you know what you're investing in. Make sure that the balance sheets, the profit, all the different markers are what you what you expect and where they need to be. And I think a balanced approach to both high yield and dividend growth pairs.
My best advice, or advice that I would give here, is don't just look at the here and now. When I'm putting together a portfolio for clients or for a need of general clients, I'm not thinking, what am I trying to solve for now? I'm thinking, what am I trying to solve for the rest of somebody's life?
Yeah.
That changes the mindset. Because when we're thinking, I need $50,000 of retirement income today, I need to build a portfolio for $50,000 today. Well, you might need 55 tomorrow, 70, 100. So as you're thinking through what you need, don't trap yourself into today. Because I've seen so many investors make so many terrible decisions because of their mind frame is now. And you're not only, hopefully, Lord willing, you're not only going to be alive now.
Right.
And you're going to have a long runway of retirement life in front of you. And for younger people, it's easier. For the retirees, those are the ones that I feel like are scared and going, well, I need more now. You can have a robust more now with dividend growth. You just got to be more picky, more choosy.
More mindful, yes.
So hopefully you enjoyed. This has been a good discussion, specifically with regards to high yield and dividend growth. It's been a fun discussion. I feel like I get tore up in this discussion because I'm like, I'm warring at myself, and you can have both.
Yep.
And so hopefully you learned a little bit to help manage your own portfolio better.